All right, so we are going to start with the first question of performance measurement of APM. It's a 50 mark question. We are going to start with the first 50 mark question, which is completely related to performance measurement part, and which is actually connected with balance scorecard. And let's see what we can do in this. But you may pause this video and try to read the scenario at your own and try to understand what the examiner is actually trying to tell you guys. Otherwise, and you can skip some 5 minutes of this video. Otherwise, you may start with you may continue with me. Kolmog Hotel is a large listed chain of branded hotel in Oslo. Its stated mission is to become its stated mission is to become the number one hotel chain in Oslo, building its strength of the company's brand by consistently delighting customers, investing in employees, delivering innovative products and services, and continuously improving the performance, right? So this is basically what the mission statement is. Now, mission statement is usually given in the question, right? And you must carefully read it because this will provide you a guidance that what your balance scorecard should look like. Because if your balance scorecard doesn't contain these issues which these characteristics which have been identified in the mission statement, your balance scorecard is not supposed to be is supposed to be inappropriate because that is not in line with what the company wants you to do. So you have to be very careful whenever you are studying mission statement. Now let me read this. To become, this is what the company wants to become number one hotel chain in Oslo. Number one hotel chain in Oslo means the company should have the maximum market share. This is basically what company wants, right? Building the strength of Kolmog brand by consistently delighting customer. That means customer satisfaction in this case is really very important. Delighting customer in the sense that there are two situations. There is a situation where you got a product which is an inferior product and are not you don't want to show it to the other people, right? But if you got a product which is expensive, which is a branded product, which is a very expensive product, so you will definitely want to tell everyone that look, we got this product. I mean, this is a human nature. So consistently delighting customer in the sense customer should be happy, customer should be satisfied, customer should be proud of the product. So that is basically what we want from for customers. Investing in employees, that means we want to continuously improve the skills of the employees, delivering innovative products and services, and continuously improving performance. So this is basically something which is given in the mission statement, right? The subsidiary aim, this is the primary objective. The subsidiary aim of the company are to maximize shareholder value. Now, what do you mean by maximization of shareholder value? We have to earn as much as we can for the customer, for the shareholder. Usually, we consider that whenever you want to maximize shareholder value, um, those indicators which actually improve the share price or the profitability of the company should be considered here, right? So this is something which will improve the shareholder value. I mean, acceptance of a project that have a highest NPV, calculation of accepting a project having highest return on investment, going for a situation, trying to opt for something that will improve the economic value added part. Economic value added we haven't studied, we will study it later, but that is an important part if you want to improve the value of shareholder. Create a culture of pride in the brand. That is basically what I told you, that customers should feel proud of having the product. And strengthen the brand loyalty by all stakeholder. We have to improve the loyalty of all stakeholder, right? All the stakeholders, whether that is shareholder, whether that is customer, whether that is supplier, everyone should keep loyal with the company. We want to have long term relationship with them. So this is basically what the first paragraph is saying. Now let's move to the second paragraph. The hotel in the KOLMOG chain includes a diverse range of the hotel in the KOLMOG chain includes diverse range of buildings and locations serving different customer group. Large conference venues, city center business hotels, and country house hotels for holidays. For reporting purpose, the company has divided itself into four geographical regions of Ostland as can be seen in the recent example of strategic performance report for the company used by the board for their annual review. See appendix number 1. Let's see what is given in appendix number 1. In appendix, sorry. In appendix number 1, it has divided its total business into four regions: east, west, north, and south. Right. So that is basically given in the question. Right. All right. At the operational level, each hotel manager is given an individual budget for their hotel prepared in the finance department and is judged by the performance against the budgeted profit. Now try to think, is there any issue with this statement? Try to think over it. You may pause this video and try to think, is there any issue with in this line? All right. At the operational level, each hotel manager is given an individual budget for their hotel. Like if I am the manager, someone else will come and hand over a budget to me that look, you have to achieve this particular profit, you have to achieve certain sales volume, you have to achieve certain number of clients, you have to improve the performance by this much amount. So I'm not involved in budget preparation probably. Why? Because this budget has been prepared in the finance department. I am not involved in the budget preparation process, and is judged by performance against the budgeted profit. And my actual and this is important. An operational each hotel manager is given an individual budget for their hotel and is judged by the performance against the budgeted profit. So whatever the profit, whatever the budgeted profit I have been allocated, my actual performance is compared with that profit. So that means I have no control over budget, but I am responsible for the achievement of the profit. The company is planning the company is planning a strategic change in its current business model. The board has decided to sell many of the hotels in the chain and then rent them back. Now, this is something new which has been done by the company. The company is planning a strategic change to current business model. The board has decided to sell many of the hotels in the chain and then rent them back. Now, you may pause this video and try to think what will be its impact of this, what will be the impact of this statement on the balance sheet, on P&L, and on the ratios. You should pause this video and think for 5 to 10 or 15 seconds that what will be its impact on balance sheet or P&L, and then continue then we will continue further. All right. So now what the issue is, if we sell our businesses, if we sell our buildings, if we sell our assets in buildings, then what will happen? It will reduce my capital employed, right? And in case what is the concept of ROI or ROCE? This is profit upon capital, right? Profit upon capital or profit upon investment. So if I sell my assets, that means my capital will reduce and I will rent them back. Rent them back in the sense, there will be an impact on P&L. But let's consider the balance sheet impact first. My balance sheet amount will reduce by a significant amount, right? And what will happen on the profit side? Probably depreciation will get eliminated because asset is no longer the property of the business, and instead of that you have to pay certain rent. So P&L figure will be slightly hit by this, but the major impact will be on balance sheet, and as a result return on capital employed will automatically improve without doing anything, without changing the strategy, without improving the profits, without changing anything else. Just change of a strategy and our ROI will improve. Now, why the company is doing this? Let's see. This is consistent with many other hotel companies who are focusing on the management of their hotels rather than managing large property portfolio of the hotels. So this has become the industry practice. If your intentions are like this, that since everyone is doing this, every other company is doing this, so we also want to do this, then it's perfectly fine. But if your intentions are to improve ROI, then this should not be done by the company. So right now it's perfectly fine because that is industry now. In order to assess this strategic change, the CEO is considering introduction of balanced scorecard (BSC) across Kolmog. He has tasked you as a management accountant in the head office with reviewing the preliminary work done by the development of the scorecard in order to ensure that it is consistent with the goal of meeting the strategic objectives of the company by tying the operational and strategic performance measurement into coherent framework. The CEO is worried that the balanced scorecard might be perceived within the organization as a management accounting technique that has been derived from the manufacturing sector. In order to assess its use at Colmog, he has asked you to explain the basic characteristics that differentiate service business from the manufacturing one. Senior executives at the board office of Colmog have drawn a preliminary list of perspective and matrices as an outline of the balanced scorecard in table number 1. Key strategic perspective. Now, this is something which have already been developed. Senior executive at the head office have drawn a preliminary list of perspectives and matrices as outlined in the balanced scorecard in table number 1. So that has already been done, right? Key strategic perspective metric, strategic financial performance or financial perspective, financial performance benchmark to Colmog's main competitor, right? We have benchmarked it. Benchmarking is basically comparison of your performance with someone else. And what we did, we are comparing share price and return on capital employed. These are two things which we are considering here. Customer satisfaction has been considered has been will be measured by customer satisfaction service scores. Total performance will be measured by variance analysis, and employee satisfaction is measured by staff turnover. The history. This is basically something which company wants to do, right? In table number 1, the history of reward at Colmog has not been good, with only 1% of the staff receiving their maximum possible bonus in the previous years and 75% of the staff receiving no bonuses. There has led to many complaints that target sets for the reward system are too challenging. Now, what do you mean by this? Only 1% of the staff receiving their maximum possible bonus and 75% of the staff not receiving any bonuses. So that's an alarming situation. I mean, people are not willing to earn the bonuses, people are not willing to earn rewards, or people are not getting the rewards, whatever the situation is. But this is something to be worried about. Under a new performance measurement reward system, employees' targets are to be derived from the above balanced scorecard strategic measures depending on the employee's area of responsibility. The new system is for hotel managers to be given challenging targets based on their hotel performance against the budget. So, what is the new system? In the new system, we will compare against the budget, the actual performance compared with the budget, industry-wide staff turnover, and the company's average customer satisfaction score. The managers will then get up to 30% of their basic salary as a bonus based on their regional managers' assessment of their performances against these targets. Now, what the CEO wants you to do, just a second. All right. The CEO wants you to use Fitzgerald and Moon building block model to assess the new system. He is happy with the dimensions of performance but wants your comments to the standard and rewards being applied. He is happy with the dimensions of performance but wants your comments on the standards and rewards being applied here. Now, this is the report which has been given here. And now what examiner wants you to do, write a report to the CEO to explain number first word, to explain the characteristics of different that differentiate service business from the manufacturing ones using callworks to illustrate your point. Now, this is something which usually students don't remember. I mean, this is a typical service costing example, I mean, what is the basic characteristics of any service organization? Usually, this is something which students have already studied in F2, or maybe their MA1, MA2, and F2 syllabus. Students usually were unable to recall those things. But let me remind you what are the properties. Um, all right. So this question is KOLMOG. I hope this spelling is right. Now, what are the four basic characteristics of any service organization? Uh, you may pause this video and think for a while. Now, services are if an organization is a service organization, the output is always intangible. I mean, you cannot feel the output, you cannot touch the output. Output is intangible, right? Then the second property is the output is always heterogeneous by nature. Heterogeneous in the sense that if I'm teaching something in as an APM facilitator in this semester, and I'm teaching the same APM somewhere else, so probably my services will we can vary depending upon my mood, depending upon the number of students, depending upon the courses which I'm teaching. So usually services vary. If I'm the same person, I can provide different services at different points. Some students may get satisfied, some may not. So it's always heterogeneous. Then there is always, I mean, there is an issue of no transfer of ownership. If I have developed something and I tell you that look, we have developed something, and I mean, if I sell something to you, then that will be your property, and I will have no rights over that particular property, right? But this is not the case of service. I mean, transfer of ownership is not there in this case. And the last one is services are always perishable. Perishable in the sense that once you miss the train, you cannot catch it again. I mean, if I am teaching you something as a live lecture and you missed my lecture, that means you cannot have it again. I mean, this problem has actually been resolved by recording and by doing different things. But again, in books, you will find that if you are unable to avail the services, you probably will lose that service. You cannot maintain any closing stock for that. You cannot store that, right? So these are some basic characteristics of service organization. Now, how can you apply this to this colmog? The services which it is providing is basically intangible. Why? Because hotel business is something which you are not producing anything, you are not manufacturing anything, you are just providing your services. Heterogeneous in the sense that there can be some customers will be satisfied by the services, some may not be satisfied by the services. So since employees are mostly involved in the giving of services, so that is basically by heterogeneous. No transfer of ownership. If I give you room on rent, I mean, if you come to my hotel and I give you some conference hall for 5 days or 6 days, that means I'm just charging rent from you. The transfer of ownership is not there. And then the perishable, if you do not come to my hotel, and if you are unable to take the services, probably you cannot. So these are some basic characteristics of service organization. Now let's move to the next part. What is the next part here? Evaluate the current strategic performance report and the choice of performance matrices used in appendix number 1. Now, this is a very crucial requirement because according to examiner, majority student attempted this requirement wrong. What the student did was they analyzed the performance of the company. What examiner is not asking you to analyze the performance of company like you guys did in F5. This is not F5, by the way. So in F5, mostly we are supposed to analyze the performance of the company. In this case, usually examiner do not ask the students to analyze the performance. Rather, It asks the students to highlight any issue in the performance system, or if company is doing something wrong with the performance measurement system, or the development of performance system according to the macroeconomic issues and the objective of company. And in this and like this, evaluate the current strategic performance report. You have to evaluate the current strategic performance report. You have to analyze this report. You are not supposed to analyze the performance of the company. You are supposed to analyze the report. And the choice of performance matrices used in appendix number 1. What we have used in appendix number 1, the choice of matrices, you have to analyze that as well. So let's see what is in appendix number 1. Let me try to zoom it out a bit so that we can see the whole report. Yes, here it is. Now, try to you may pause this video for a while and try to look at this video and see what is good in this report. I mean, evaluate always means you have to identify what is good in something and what is bad in something. So, what aspects are good in this report, and what aspect do you think should be included in this report, right? So you need to identify. So you may pause this video and think for a while that what should be done, right? All right. So I hope you have tried to identify this part. Now, um, let's see. Second part B, right? What is the issue here? Let me try to highlight the issue. I'm just trying to reduce this window. Sorry, I'm unable to do so. All right. Now, what is the issue in this situation? The good part is that this report contain profit and profit figures or income statement of each individual divisions, right? So that is a good part, that company has realized that since it is performing in different areas, so it should include the performance measurement of all divisions in this report. So that is a good thing, which has been done by the company, right? Now, what is the problem here is that if you see this report, you will not be able to identify. I mean, another good part which has been done here is that overall total profit, there has been increase in profitability shown in this situation. I mean, the profit revenue has been, there is an increase in revenue, but as a percentage of revenue for 2013, there is no change in sales given here. I mean, what percentage of sales has been, what is the increase in sales percentage, it's not given here, right? So this is something which is important to consider. The second issue is that although the profit of each division is given, although the performance report of each division is given in this report, but the issue is that we know that in 2013 sales volume was more than expected, right? We know that in 2013 sales were more than expected, but we really don't know that which division actually contributed to it. I mean, 920 instead of 926, company actually generated a revenue of 985,000. So we really don't know which division actually performed well and which division actually didn't perform well. So it's really very important to show the comparative figures, right, of each individual division, because if you are not showing comparative statement, there is no sense of showing these figures. I mean, these figures doesn't represent anything except that this is the performance. We cannot identify that what actually happened. Either East Division performed well, or West Division performed well, or North or South Division performed well. We really don't know. So comparative figure is missing here, right? So comparative statement, comparative statement is missing here. Comparative statement of divisions is actually missing here, right? Then, whenever you try to identify the performance of any specific company, then we usually try to find out the contribution, how much contribution the division is earning, and so that we can exactly identify that if you increase the sales volume, what will be the increase in overall contribution and the profit, because fixed cost is something which you cannot increase with the increase in sales, right? So nothing has been given here as a fixed cost or variable cost, that what is a fixed cost or what is a variable cost. So lack of differentiation between fixed cost and variable cost, and there is no calculation of contribution in this question, right? then then what is the issue? uh, See, what was the object, what was the mission statement of company? Let me try to recall what is the mission statement. Mission statement says that to become the number one hotel in Ausland, right? This is a very important measure of the company, right? And is there any attempt to identify whether company, whether, and we discussed that market share is something which is very important, but no attempt to calculate the market share has been made in this statement. I mean, if the statement report, if you see a report saying that the market share of our company is around 20%, and the major sorry and the relative market share of another company is around 28%. So that means what? That means company is still unable to achieve the number one target objective. So what the need what is required here is to identify any is to incorporate the market share part here. Market share is missing in this particular report, which is the part of your mission statement, right? Now, what else? There has been no attempt to identify whether customers are satisfied, whether employees investment has been made in employees, whether products are innovative, whether customers are feeling proud, and whether stakeholders are loyal or not. So these non-financial indicators, there has been no attempt to show what are the non-financial indicators comparison. So that is a part of, that is a most important part of your mission statement. So what is missing here again? uh, Market share is missing. Market share is basically used to identify whether company have achieved number one rank in the year. Then there has been no attempt to identify a no non-financial performance indicator. In the sense, there has been no attempt to identify the customer satisfaction, which is the part of your mission statement. There has been no attempt to identify the employee satisfaction or employee improvement, or what you can say, employee satisfaction probably, or improvement in employee skills kind of thing. There is nothing mentioned here. There has been no attempt to made to identify whether there is innovation in the industry, in the company or not. So, and there is no attempt to there's no attempt have been made to check whether customer feel proud of use of the company, of using the company services or not. So these are something which is missing in this report. Then there is another point which was given in the mission statement, that company wants to maximize shareholder value, right? So is there any attempt to measure that? Let's check this. Capital employed is given here, right? Capital employed, there has been no such change in capital. All right. So, right. There's a change in capital employed by 6.29%, right? This has nothing to do with the customer shareholder value to maximize the shareholder value. There's nothing like that. Earning per share is a good thing. Earning per share is a relevant performance indicator. Share price is a relevant performance indicator. ROCE is a relevant performance indicator. So these three indicators which have been identified in appendix number 1 are perfectly fine, right? So financial indicators are something which is relevant, which is given in this report. But you may argue that there are few things which are still not the part of report. I mean, cash flow statement is not the part of this report. Cash flow is very important indicator of survival probably. And then sales percentage change in sales is not given here. That is something which you can consider as a growth factor, because when your sales are increasing continuously, that means the company is growing. So growth factor is not given here. um, Everything else is fine apart from these issues. Things are fine. So that was basically something related to the evaluation of strategic performance report. So strategic performance report is basically this, and we have identified that there are certain flaws. The first flaw is that there is no comparative figures given for west, east, north, or south division. The good part is that the total comparison is given. The good part is that there are four. The company has split its division performance into four division, but comparative statement is missing. Um then there is no attempt has been made to identify the contribution, which actually shows that how the performance of company is, because fixed costs are usually constant. You cannot do anything about fixed costs. Then there has been no attempt has been made to incorporate some non-financial performance indicators like market share, which will indicate the company's performance as a number in order to achieve the number one target. And there has been no attempt made to incorporate employee satisfaction, customer satisfaction, brand loyalty in this report. So non-financial indicators are completely missing in this from this report. So and but the financial factors are which are given are perfectly fine. But we can argue that EVA and cash flow statement may improve the situation. But whatever is given reasonably provide us with the relevant information, right? Then you need to write all these things. You have to do a writing practice in this case. We are just here to identify those bullet points. Obviously this is not the level where I will tell you guys how to write the answer, right? Then there is a third requirement. Evaluate the outline balanced scorecard in table number 1 at the company suggesting suitable in improvements, right? So evaluation means, again, you have to identify if something is good in that report. You have to identify that, and you have to give the reason why you think that that is relevant. And if you think that something has not been done accurately, properly, then you have to identify why you think that this is not good, this is not an appropriate measure. And you also have to suggest some improvement in that system. So this is basically what is required. Now let's move to the table number 1. Let me try to delete these unnecessary lines. These are just irritating me. All right, this is table number 1, right? What is given here: uh, strategic financial performance benchmark to KOLMOG's main competitor, share price and return on capital employed. Share price is fine. Return on capital employed is fine. I mean, how you can start? How many marks are awarded for this requirement? 12 marks, right? 12 marks means 3 mark for each scorecard perspective, right? So first of all, you have to identify that what is the strategic performance. I mean, financial performance includes something which is relevant for the performance of the company, financial performance of the company. So, what was the objective? Objective was to enhance or to maximize the shareholder value. Share price, return on capital employed are perfectly fine. I mean, there is nothing bad in it. What else you can recommend? We can recommend economic value added, which we will discuss later. Company can include some cash flow statement here in order to identify whether company is facing any issues in terms of liquidity. Company can incorporate some gearing ratio in order to identify if company is facing any corporate failure issue, or we can include some operational gearing here, operational gearing ratio, because here we can see that there's a lot of fixed costs involved in this situation, so we can add operational gearing here too, right? So what we can add here, let me try to write it here. What we can add here, we can add economic value added, right? We can add cash flow statement, we can add operational gearing, we can add gearing ratio. Apart from that, EPS and share price and return on capital employed. I think these three have been mentioned. Share price. Oh, EPS is not here. So EPS can also be added here. So these extra ratios can provide a better insight about the financial performance, financial health of the company, right? EVA, economic value added, how much economic value have been added. Cash flow for liquidity issues. Operational gearing is for liquidity issues, and gearing ratio is for long-term issues. EPS is for profitability, right? Now, customer satisfaction is actually identified by customer satisfaction survey scores. Customer survey score is basically 1 to 5. Usually company asks that if you are satisfied with the company, then you have to rank from 1 to 5, where 5 is the best and 1 is the worst. So customer satisfaction survey score, you can go for, you can identify this. This is perfectly fine, there is no issue in that. But what we need to do is we need to check whether customer survey score is complete and capture all relevant performance indicators. As I said in my previous lecture, that if punctuality is very important, and if that is missing in from the feedback form, that means you are not capturing a very important information. Similarly, if hygiene is important, if hygiene is not given, or the environment, or something related to some other performance related to hotel industry is not given in the customer service score, then probably you will not be able to measure that, right? Now, the third part is hotel performance against budget. So this is fine. This is perfectly fine. But we can add that part. Apart from that, if you want to add any other thing, you may check the recommendation part. You may check complaints kind of thing. But still, I believe that customer satisfaction survey score is a very relevant area which company is examining, which company is actually implementing. Hotel performance against the budget, variance analysis for each hotel, that is given here. Um, Hotel performance variance analysis for each hotel, right? So variance actually means comparison of budget with the actual. So we need to identify two things here. The first thing is that uh, each and every component should be compared with the budgeted expected part. Number two, company should try to separate controllable and non-controllable uncontrollable factors. I mean, for example, if there are four divisions now, there are four divisions in the company. Suppose each division, there are some security issues in each division, right? So there are certain security issues in each division. Sorry. uh, I don't know what is happening here. All right, let me try to write it here. Suppose there are some security issues in East Division, right? So, and East Division and South Division is perfectly fine. South Division is very, it's very, is a tourist destination, and there are a lot of sports tourist spots there. So there are more chances that South Division will earn more revenue as compared with East Division. So you have to identify where you have to split variance into controllable and non-controllable factors. I mean, there is no issue with South Division, so South Division can achieve its budget. But if in the meanwhile, in the during the year, if East Division is facing some uncertainties, then you must split the variances into controllable variances and uncontrollable variances. And manager performance should always be evaluated on the basis of controllable variances only. So still, if companies is analyzing variances, it has to measure variances in terms of controllable and uncontrollable. Similarly, cost variances should be calculated separately, revenue variances should be calculated separately. Apart from that, this is fine. Now, what else is given here? What is the next part? The next is employee satisfaction, and employee satisfaction is measured by using the staff turnover, right? Do you now try to identify, try to think, do you really think employee satisfaction can be measured by staff turnover? Do you really think that if someone is not satisfied with the company, he will leave the organization? No, probably no. Because an extreme, if I'm not satisfied with the company and I'm not getting any other job, then my opinion will not matter in the situation, because I'm not leaving the organization and no one is asking me what's the problem with me. So instead of staff turnover is also relevant. I'm not saying that this is irrelevant. The more staff is in case of high staff turnover ratio, that means employees are not satisfied. So along with this, company should introduce some employee survey, in which company try to capture the information about the problematic part in the business, that whether the employees are satisfied with the facilities of the hotel, or whether they have ample chance of improving their skills and to proceed their career, or whether they think they are satisfied with the remuneration or bonuses and everything. So it's very important for the company to capture these information, to have these information. So along with the staff turnover, these information must be gathered by the company. So what is the final, let me summarize this part, because this is a very important part, and in future we will see a lot of questions which examiner will ask in a very similar manner. So strategic performance may be said that these indicators are fine, but if company introduce EPS, share price, ROCE, and gearing ratio and operational gearing, that would be good for the company, EV and cash flow, etc. Then we said that we need to check for the second one. We said that customer satisfaction survey scores are good, but it's very important to check whether these scores surveys are completely accurate, complete in all sense. Capture all relevant performance indicators. Then the variance analysis is fine, but we must split total variance into controllable and uncontrollable, and cost and revenue separately. And then staff turnover is fine, but we should add some more indicators, because the staff turnover alone is not a perfect indicator for staff satisfaction, for employee satisfaction, right? So this is basically a 12 mark part. Then there's another requirement. Okay. Then there's another requirement that which says that describe the difficulties in implementing and using a balanced scorecard at KOLMOG company. So, what can be these are some typical disadvantages of difficulties of implementing balanced scorecard. I mean, uh, try to think what can be the issues. We will discuss it later. I'm more interested in part 5 because this is just a quick recalling of the issues of the balanced scorecard. Explain the purpose of setting targets which are challenging and evaluate. Explain the purpose of setting targets which are challenging. Why you think that the target should be challenging. And evaluate the standards and rewards for the hotel manager's performance reward system as required by the CEO, right? So explain the purpose of setting targets which are challenging. Now, challenging targets basically means what? Uh, we should set our targets which challenge employees in terms of performance. I mean, just think for a while that ACCA performance percentage is 50%, right? If I reduce it to 25%, it will be very easy for students to pass. But that that will negatively impact on performance. I mean, a student will get lazy, students will not get serious with the studies, their the output will not be a good output. So, and if I improve it, if I pass increase the passing percentage to 70%, then students will do a lot of efforts to pass the paper. But there will be a few students who will leave ACCA by saying that, look, it's very hard, we cannot do this. Similarly, if you set the target with challenge employee, then probably you are bringing a good part out of the employee. But here we need to understand that challenging target doesn't mean that we set some unrealistic target. Target should be set in such a way which uh, which uh, which challenge employee to work in such a manner to bring some innovative ideas and try to get the solution, get the target. So this is basically what you mean by challenging. It's always advisable for the companies to set a challenging target, not an unachievable target, but but a target which is not very easy for employees to achieve. Otherwise, employees will lose their ability. They will get lazy. Their skills will not get improved. They will get blunt in their skills. So this is something which is very important. And evaluate the standards and reward for the hotel managers performance reward system as requested by the CEO. Now, what does CEO wants? Let's check this. Mm, he is happy with the dimensional performance but wants you to comment on the standards and reward being applied here, right? Uh, Look, what we have identified in the previous lecture. Let me try to open that slide if I can. Um, all right. This is basically what we have already discussed in building block model. The standard should be There should be an ownership of a standard, the standard should be achievable, and there should be an equality of a standard, right? So this is basically what you have to write. Now, let me try to connect it with the scenario if it's possible. There was something written about the performance and standard in the organization. Yes. The history of rewards at KOLMOG has not been good. Only 1% of staff receiving their maximum possible bonus in the previous year and 75% receiving in the 75% of staff receiving no bonus. Only 1% is receiving the maximum bonus and 75% is not receiving bonuses at all. That means the remaining 24% are those people who are not receiving their maximum bonuses, but they are receiving certain kind of bonuses, right? This has led to many complaints that the targets set for reward system are too challenging. So this is important, that the targets are too challenging, right? Uh, Under the new performance reward system, employee targets are to be derived from the above BCS strategic measures depending on employees' area of responsibility. The new system is for hotel manager to be given challenging target based on their hotel performance against the budgeted profit, right? Industry-wide staff turnover and the company's average customer satisfaction score. The hotel manager will then get up to 30% of their basic salary as a bonus based on their regional manager assessment of their performance against these targets, right? So these are targets which have been given to the managers. And one more thing, against the budgeted profit, right? Now, if you are comparing performance against the budgeted profit, then it's very important to see that who is actually setting the budgeted profit. Who is setting the profit? Remember, um, finance department is actually setting the profit. Let me try to change this color so you can. Finance department is actually setting the budget, which obviously doesn't include this the hotel manager, right? So let me try to identify what are the issues, right? Look, we said that there should be a ownership of a standard, right? Ownership of a standard is very important. Do you think that there is an ownership of a standard? Obviously no, because the profit calculation has been made by the finance manager who doesn't know anything about the hotel industry. What is get? I mean, one finance department is preparing budgets for all divisions. He really don't know what is actually happening in those divisions. So this is something which really need to be changed. I mean, to improve the ownership of a standard, those managers must be involved in the budgeted profit calculation, in the target profit calculation. Whether the standards are achievable or not. Apparently, what is the situation? Mm, the new as so let me check whether evaluate, explain the purpose which are challenging, evaluate the standard. All right. So the the history of reward, the history of reward. But apparently, what is the reward system is the results are showing that the standard which has been set by the company is very challenging. Why? Because there's just 1% staff is actually achieving that target. Maximum bonus is achieved by just 1%. So it's not impossible, but that is very difficult for the employees to achieve. So standard should be achievable, reasonably achievable for everyone, reasonably achievable. So we really need to check that, and 75% employees are actually only 1% is achieving the target. That means the maximum target is too difficult to achieve. Equality means what? Equality means that all divisions must be compared with the resources um, or the kind of situations, circumstances are actually available there. Reward system should be based on controllable factors only. Controllable factors in the sense that in case that there is some uncontrollable factor, as I said, that variances are should be analyzed on controllable factors. So if there is any uncontrollable factor, we must not include it in the performance measurement. Um, Create motivation. Motivation is clearly lacking here because 75% of staff is not interested in bonuses. Either they are not achieving it, since 24% of staff is achieving certain bonuses, so we cannot say that bonuses are not are impossible to achieve. But probably bonuses are not attractive because 75% of staff is not interested in that. And as we can see that if we achieve three major targets, there are three major targets which have been set by the company: the achievement of budgeted profit, and we have to keep a specific staff turnover which is lower than the industry average, and average customer satisfaction. And by doing all these things, company, what we are getting, just 30% of the basic salary. So this 30% of basic salary is apparently seems to be very low amount. So it's clearly not creating any motivation among employees. So controllable factors, it should there should be controllable factors. So it's not nothing about this has been given, but whatever variances we are calculating must be based on controllable variances. Create motivation, there is clearly lack of motivation, because there's just 30% bonuses. 30% bonuses are allocated if these employees work so hard and achieve three major ratios, but still they will get 30%. So there's clearly no motivation of bonuses. Clarity is something which is important, that we must be, all targets must be clear, which seems quite reasonable here because we have already identified. But there's one important thing. Clarity means, what do you mean by average customer score? We must define what is the average customer satisfaction. Industry wide staff turnover. um, Industry wide staff turnover. So industry wide turnover, what is industry wide turnover, we don't know. But I mean, that is something which is quite clear, but this average customer satisfaction score is unclear, so we need to check this part, right? So there are six dimensions, there are six areas. In all, among all six areas, ownership is missing here, standards are achievable, that part is missing, because whatever the maximum bonus is, people are unable to achieve it, majority is unable to achieve it. So standards are too challenging. Equality part should be checked here, because all divisions have different perspectives, different areas, and total performance is based on what the situation is. Reward should be based on controllable factors, so that is not given here, but that should be based on that part. Uh, Create motivation, there is lack of motivation, clearly there is a lack of motivation, so that must be created. Clarity in the sense that it must be written, it must be clear to the manager that how much, what should be the, what do they mean by average customer satisfaction score. Then then we let's move to that part which we skipped. Direct difficulties in implementing the balance scorecard. See, whenever you see, this is very simple performance report, right? This is a very simple performance report. Mostly figures you will get from your system, from your information system, from your normal traditional system. So you don't have to, you don't have to collect a lot of information here. But if you switch to balance scorecard, there are a lot of non-financial indicators, and you have to get these the information about non-financial indicators from lot of different resources. So information gathering is an important, it can be a problematic part. Data gathering, information gathering can be an important, can be a problematic part. People will not be willing to gather that. Second point, I mean, it's important. I mean, the financial indicators can be manipulated, as we can see that, as we have already seen that ROCE. If you remove the capital employed, then you can easily improve the ROC, return on capital employed, and we will see few other areas which we can use in order, which we can use, and through which we can definitely improve the performance. But so probably employees will be reluctant to move to balance scorecard, which will tell the stakeholder everything about what is happening in the company. So these two areas. Uh, Let me open that page. Right. So the first area we discussed is data gathering. Right. Then lack of willingness for employees to switch to balance scorecard. Then definitely this there will be a this will be a time consuming activity for the employees. So lack of focus can be here, or lack of focus in the sense that if you apply balance scorecard, then probably we just want to apply that. I mean, we are not interested that whether this will capture what is written in the mission statement. If you're asking me to get the non-financial indicators, these are the non-financial indicators. So in, it's very important to select performance indicators and CSF and KPIs which are actually connected with the mission statement. So lack of focus can be here, and And then the last point is there can be a conflict of perspective. Conflict among perspectives. Conflict among perspective in the sense that, for example, if you want to improve the shareholder value, how can you do that? You can do that by improving the profit of the company, right? And if you want to satisfy the employee, what you have to do? You have to give them more money, more wages, more salaries. So if you want to satisfy your employees, your profit will reduce and your shareholders will not be satisfied. And if you want to satisfy your shareholder, you have to dissatisfy your employee, right? If you want to provide a quality output, then you have to increase the cost, and again profit can be reduced because you are increasing the cost. So there can be conflict among perspective. You have to identify that which stakeholder is actually more important. I mean, no, usually we consider stakeholder mapping here. So you have to prioritize that whether customer is more important or shareholder is more important, and we can manage our priorities accordingly, right? So this is basically a very simple, this is basically a discussion of a question which has been examined in the past, and that was a 50-mark question, right? So this topic has a potential for 50-mark questions. So you may expect that you can expect a 50-mark question from the first performance in the from performance management topic, right? So that's it for this video. Thank you for watching this. Have a nice day. We will do another question in the next video. Thank you.